Thank you all. Thank you for joining. So to start off this session, I have some good news and bad news, and I want the panel to help me sort it out. So we're going to put a chart up on the screen. This is it's going to be travel startup funding over the past decade with the data drawn from Phocuswright's travel startup database. So I'll start off with the seemingly bad news, which would be that funding in dollar terms was at a 10-year low last year at $5.2 billion, and it's on track to be around there again by the end of this year, maybe a little bit higher. Arguably even worse, the number of funding rounds that were completed was the lowest it's been in a very long time. And as of this year, it'll probably wind up being under 250 rounds conducted by the end of the year. And on the line, you can see there were often 1,000 rounds, 700 very often. So this seems like bad news. But given how inflated things were in 2021 at that peak of 17.6 billion, is this actually maybe just a healthy thing?
Yeah, absolutely. I can kick us off. So maybe it's just the early stage optimism that I have, but when I look at this graph, actually I see partially a good news story. So when we look at the 2024 numbers, that's just through Q3. So if we annualize it, we're past where 2023 was. So at least from a dollars invested perspective, I think we're on the right track. When you look at the actual deal count, that's when it really starts to become a story of haves and have-nots. I think at the seed stage, things are still very robust. Once you get into Series A, Series B, and Series C, that's when deal counts have really started to decline, and it's much harder to raise capital. But with that said, larger rounds are happening just for many fewer companies. So definitely positives and negatives there, more money flowing into the industry, but just for fewer companies, especially at the later stages. One other potentially positive point that I think the data probably doesn't show is that there's a lot more bridge rounds happening. So there is more and more capital continuing to flow in. It's just not being reported and getting folks to the next stage where then they could raise that much larger Series B, Series C. So hopefully there's more than what's actually being shown. And anecdotally, it does feel like more and more investors are interested in travel tech and entering the industry. So at least on my end, I'm feeling very positive about it.
It's a good point. Our data probably doesn't capture those bridge rounds that may not be public.
Like the way I would summarize it, 2023, like reset of growth, efficiency, and plans. 2024, like startups are really focused on execution. It's a good news for late stage investors, to your point, because like the rounds that we're actually seeing are larger and a lot more focused. Companies are more profitable, they're delaying when they don't need to raise, but when they do raise, there's a really clear use of proceeds, be it yes, pushing AI innovation, but also this M&A consolidation, secondary. So there's a lot more things that are going on, and I think for me, like I'm actually pretty bullish about 2025. Like I do think we're just gonna, companies are now back into like, hey, we've kind of like reset. Now we're ready to kind of really push and accelerate going forward.
Yeah, I mean, I totally agree with what both of them said. The only two things I would add is one, in my observation, I think we shared this earlier, companies are waiting longer between the funding round closing and announcing it to the press publicly. So there's probably also some difference between the years where certainly, if I think of 10 years ago, the second you signed the piece of paper, you're calling, T-News or whoever to talk about the round. So certainly I think there's probably some delay there that's leading to this. The other thing I'd say from the perspective of a founder, I actually think it's better to have fewer startups. When there are more startups, you're competing for the same pilots, for the same clients, for the same employees with everyone else. So I think if you're a founder who has been fortunate enough to get funded, this is probably good news for you.
So that's a lot of good news. The other good news I want to talk about was that after a multi-year lull, it appears many investors have raised new funds this year, including Excel, General Catalyst, Lakestar, and Mia. Inovia raised your third growth fund of $300 million in June. So let's start with you. In relation to this data, we're looking at what does this latest flurry of investors raising new funds, including your own, say about the outlook for the amount of dollars as well as the number of funding rounds that we'll see in the coming years. And it was good to hear Chris and Eric were positive. How about you?
I think it would slightly change the statement. I think like funds are trying to raise new funds, and just to your point on how fundraising is longer for startups is the same for funds. And I think what we're seeing is actually there's been a delay. It's been very long to raise funds, and that's because basically all the exit window has kind of been pushed by 2 to 3 years. So that's why when I mentioned that larger rounds are happening and there is a clear use of proceeds, I think all the latest 4 or 5 deals I've done in later stage, more than 50% of the proceeds were for secondary, not necessarily just for employees and founders, but actually a good chunk was for early stage investors who are really looking for liquidity to show results, DPI, and then to help on fundraising. So that's a phenomenon that we've seen, and I think 2024 will be the biggest year for secondaries, and I think 2025 will just continue to see that trend. So I think that's something that's been shifting in the type of rounds that we're seeing in the market. So funds are still trying to fundraise.
Yeah, the thing I'd add is what Betsy referred to earlier. I'm sure you've all seen this too. All the traditional generalist funds are all looking at travel and hospitality as a place to invest. Lots of reasons. One of them is the TAM. The market is very big, and every fund wants exposure to big markets. Another is we're moving to a level of sophistication with technology in our industry due to many of the work that you guys are doing, which also will hopefully increase margins in the medium and long term in the industry. So I think there's lots of reasons to also look at non-travel funds that are very excited on our space. And for founders, I would really encourage you to try to get a mix. I think it's really important for you to have around the table some investors, whether it's a VC or an angel, who knows the space, in addition to nice big checks that some of you are getting from the Sequoias and Andreessen Horowitzes of the world.
And just a fun fact, I think last year, I think maybe over 3 late-stage PE funds. I think this year there's at least like a dozen of like PE that are getting into the space that I've never seen in this conference before, so it is kind of cool.
Yeah.
Yeah. And you talked about the fewer funds that are happening, they're going to, a lot of them are larger, later stage rounds, right? But the new investor funds that are being raised are a lot of seed and growth. So I do think that that does seem like really good news for the earlier stage companies, that capital will be flowing more than it has been.
Yeah, and I think also some of us learned the lessons in past slowdowns where for those of us investing early, we have to keep investing. We're not going to have companies reaching a B, a C, and an exit in 5 to 7 years if we're not making investments this year. So even though it may be a tougher environment, there's still lots of deals being done.
Yeah, a lot of it's downstream effects from 2021, right? Next, I want to talk about generative AI and the impact on startups as well as funding, thus investors. So I want to tell a quick personal anecdote. I think it's just something I think is really great for the audience to hear, something I think is super important. I've been totally blown away by this software called Replit Agent, and I want to do a show of hands how many people have used it or even heard of it. I assume just a few probably. Don't feel bad. This is a pretty new product. But to me, it represents a watershed moment in technology because it's a chatbot that you can talk to like you're talking to a developer, and it will build what you want in front of you. It's far from perfect. It's new. But as someone who's fairly technical, not a programmer, I'm building fairly sophisticated applications that help me at Phocuswright that I could never have done without a budget of thousands of dollars and working with a developer, and it's $20 a month. Okay, so to me, it's a very big deal.
Yeah.
So the question would be, how do you see this having an impact on how companies are built, and how much money they'll need going forward? Because extrapolating this, this kind of increasingly sophisticated capability when you look at marketing campaigns, admin tasks, data analysis, customer service, obviously, companies can run a lot more streamlined. So will we not really see that funding curve recover as a result of that?
I think you'll still need a lot of funding. So I think in 2021, there was this push to grow at all costs. So it was raise capital and then go spend it, go experiment, go out for sales and marketing, and more than anything, go out and hire to really beef up your team. I think now there is much more of a focus on profitable and sustainable growth. And with the advent of Gen AI and with all of these more horizontal tools that your dev team can use and your sales and marketing team can use, you can have that same growth, but it'll be much more profitable because you'll need less headcount, and the team that you do have will be much more impactful. So I do think perhaps this trend of longer time between fundraises will sustain, but you'll still have companies that need to raise because they'll be able to experiment more, they'll be able to iterate more, and just build a lot faster. So it's an exciting thing, at least in my mind.
Maybe just one specific, like we have a portfolio company, to your point on AI automation efficiencies. We have a company that last year was all kind of words, but now we're really starting to see the impacts in the margin. Like I have a company that was able to double EBITDA in less than a year mainly because of this AI automation, which is amazing, with the same type of growth. I think at least on the later stage front, what I haven't seen yet, is more on the revenue side. Like I have like a pure AI that's been really generating revenue on its own versus just enhancing the kind of current software that can push optimization. So that's what I'm waiting to see from a late stage perspective.
Yeah, when Eric was just on here before and said something about how good times will come again, we were backstage, we were saying, yeah, as soon as these AI companies can show revenue impact, the good times in venture will be back in an instant. The only thing I would add to the specific question, well, two things I would add. One is we don't actually know the ultimate economics of these AI models. Today, OpenAI and all these guys are pretty cheap to use. It feels a little bit like AWS. But the question I always ask founders is, if you think of the revenue pie of your startup, and you ask yourself how much of the hard work was done by you, and how much of the hard work was done by OpenAI or Gemini or whomever, and how should the revenue be split based on who did the hard part of the work? So the point I'm trying to make is we don't actually know how the economics of this new AI era is actually going to play out, and thus I don't know if more or less funding will be needed. The only other thing I'll say, too, is I think it's possible we're going into a golden era of small and medium businesses, which is good for everyone except for maybe us venture investors. But the idea is we're all using the same LLMs and the same core AI, and frankly, it's really easy to manipulate. The example you use is a perfect example. Like, anyone can now do basic coding without a coder. It's like pretty incredible stuff. So I think it's very likely we're going to see a lot more small and medium businesses rise who can own a small subset of the market, but there's going to be someone who's just a better fit for someone else and for someone else, and thus we may be in an era where a lot of these AI companies become very profitable small and medium companies, but not the giant outcomes that at least the three of us are looking for.
And there's an implication there for competition.
Absolutely.
Right? Things get a lot more competitive.
I think it's going to be a lot more competitive, and I think this is a pro-consumer thing, right? Imagine today, right, our the dominant OTAs are all very broad and very generic. Imagine a world where a lot more niche OTAs, or what I actually think even I'm more excited about is digital and AI-first travel agencies that are just much more catered to your specific needs, and I think as a traveler, that seems like a win-win.
It seems like the money might be needed for marketing to break through the noise
Absolutely.
that could be created in that type of environment. Something Chris and Eric actually just touched on, maybe Gilad, I know you have some strong thoughts on this. AI native startups, what kind of advantages will they have versus the incumbents that have all the data? And,
Yeah, no, absolutely. This is actually a really difficult question because, right, like those of you in startups and starting new agencies and whatnot have a huge advantage that you don't have legacy tech that is decades old that you have to unravel while building the same thing but maintain your current itineraries. It's actually a really difficult position to be in, and that is a huge advantage. A lot of you around here have probably seen Fora, which is one of the exciting kind of digital-first travel agencies. They've got a giant advantage. They're just building new tech in a data era that's much better than where these other folks came from. So I think there's a huge advantage for the upstarts, but because we're all using the same core AI models, the core differentiator you have is the data you have for further training, and who always has the most data? The legacy players. So I was talking with Susanna Chu from Amadeus Ventures recently about this topic, and she made a point that I think is really smart and right on, which is this is a really good era for corporate investors because they can bring you the check that you need, but they can bring proprietary data that gives you an advantage over your competition that is actually potentially more meaningful than just getting a little bit more funding or a little bit of a sexier VC name on the cap table. So I think there's pros and cons to both, and potentially the hybrid is actually maybe where you win the best outcomes.
I think the startups also have an advantage because they are able to experiment more. Like with a large incumbent OTA, anything that impacts their checking flow is going to be tons of hurdles to jump through. It's going to be really, really hard to actually innovate there. Whereas for a newer company, they can add things in, they can A/B test, and they can really figure out what consumers want and how to personalize it for their journey. And there's really exciting opportunities there.
I mean, from the later stage phase, I haven't seen any yet scale native AI companies. Having said that, though, I think the AI enhancer software this is where like you kind of, if you don't have that today, you're gonna be completely disrupted in kind of 2 years from now. So that we're all seeing all the companies to really push for that, and it might actually create M&A opportunities for them to accelerate on this, buy versus build, to buy some of these native AI as well. So that's something that we're seeing in our portfolio companies.
And we saw this last year, right? Like when we think of Gen 1, the first generation of Gen AI startups, saying Gen twice is confusing. A lot of them exited But we can be honest, right? They're not the exits that we would want for our funds. And these were really more like acqui-hires. So I think what she's mentioning is exactly right, that there's likely to be, hopefully higher check size because there's more product and more tech there. But a lot of these startups will ultimately end up being incorporated into larger companies, which again, might be a win-win.
Staying on AI, looking a little bit further into the future, we're going to see some demos later today from some startups working on autonomous agents that can go out and do things for you, like booking your travel on your behalf. OpenAI, Anthropic, Apple, all moving toward this world. Most people following these developments closely seem to agree that this agentic world where buyers and sellers have their own AI agents acting and transacting on your behalf, the seller's behalf, is becoming realistic. So I want to talk about this for both the B2C and B2B point of view. Mia, you do a lot of B2C investments, so do you have an opinion on next 5+ years, the impact that these autonomous agents could have on your portfolio companies and consumer travel?
That's a really tough one.
No?
I wish I knew. I don't, but I think, to your point, it's really tough to know in 5-10 years what's going to happen. I think what we're really looking for is teams that can adapt and adopt really quickly. So I think this is a team that, especially from a later stage, teams are moving so fast that I think a team that was really able to, I think those are the 2 words that I'm looking for, adapt and adopt.
I think on the B2C side, there's a lot of really great opportunity happening in personalization, but I also think you can't discount that travel is a very different industry than others. If there's an agent to help you do your taxes, everyone would be thrilled if you could just send that off and it has it automatically. Whereas I think when you're booking travel, the dreaming is a part of it, the experience is a part of it. And sure, not the going through and figuring out all of the logistics, maybe that part the agent can really help with, but there is certainly that balance on the consumer side of making sure that the experience is still there and they get to be part of that versus happening all automatically.
Yeah, so I'm very excited for the future. You outlined I walk into the hotel, my AI assistant talks to the front desk assistant. It's just much more streamlined. My pet peeve is being asked for the credit card for the 4th time in this experience together. So I'm very excited for that future. The one point I just want to add is using the word agent is just an oversimplification. It's going to be agents. OpenAI refers to them as swarms. There's other technical terms that people use for them. But it's really going to be a lot of smaller agents that are working together to dedupe and to find the right answer. And by doing so, you actually get progress faster. Or if one of you is telling me, I'm going to build the everything engine, the everything AI agent for a hotel, the A, I wouldn't invest, because I don't think you can actually have enough expertise at the beginning to go across. But B, it would take you so long to do it that what I think will actually happen is a lot of people doing smaller agents starting to work together will end up beating you to market. So I think it's important to remember that there'll be multiple agents and that you have the opportunity to work on not just the overall agent, but the entire experience there. So I think that's a really exciting future where we get to focus on the traveler and the travel experience and hospitality and the reason most of us got into this business in the first place, as opposed to dealing with the accounting or the passport reconciliation in the back office.
Yeah, it's a very theoretical realm, for sure, hard to answer. But how do you think about...
And I would say your conversation later about decentralized ID is just as important for this as what we're talking about now. Sorry, I didn't mean to jump that gun, but I think it's just as important to actually, without decentralized ID, none of the things we just said can happen.
Yeah. So how do you think about, the vision that founders that you're investing in today and how they may need to pivot and how much leeway you give them? And again, Chris stole out of my thunder. He asked a lot of these questions, but I want to hear your perspective.
Yeah, a lot. At the end of the day, right, what we want from founders is to be the agile thinkers, the entrepreneurs who find the right place in the pond, right? The analogy, I stole it from Benchmark. It's not an original analogy to me, but the fisherman in the pond, right? When I look at an early stage company, the first question I ask is this the pond I want to fish in? Is it rich and exciting and big enough and not competitive enough and whatever? And the second question is this the fisherman who can work their way around the pond? And I'm not a fisherman, so I'm really stretching my analogy here. But finding the rich area, finding the right time, knowing the right hook. Again, I'm really stretching my ability here. But the answer is yes. The reason you invest in a founder, and the reason every investor would tell you in the early days, the founder problem fit is as important or more important than any other factor, is you can give them the leeway to go and search to find the right opportunity.
Do you want to talk quickly about your vision for how distribution dynamics may shift? Because you have this vision for multiple agents, but there's also the idea that your ChatGPT agent Perplexity just launched shopping.
Yeah.
You know, that's a step in this direction where the commerce is conducted potentially with the big, you know, LLM search players. So, you know, how would dynamics between suppliers and intermediaries shift in that?
Oh, that's an even harder question I thought you were asking.
About 45 seconds.
In 45 seconds or less. No, so at the end of the day, the role of an intermediary is completely going to change. Right, intermediaries existed as pipes and as trust-creating mechanisms. Right, I trust Expedia. I'm going to put my credit card there because I don't know that little hotel in the middle of nowhere, and maybe they're there. So the two things that they kind of did, the plumbing and the trust building, are now able to be done in other ways. And because of the intermediaries, the people in the middle are going to have to think about how do we add value in a world where, you know, NDC on the airline side, Direct Connect, and lots of other places allow them to be disintermediated. And I think one of the places that this can be is around experiential search. Right? So I use this example a lot when you look. I use an example from real estate. When you're looking to buy a house or rent an apartment, the first question is how many bedrooms or how many square feet do you want? Whereas I think a much better question, and this is perfectly applicable to travel, is what kind of a lifestyle do you want? Do you want a spa-like escape? Do you like to host dinner parties all the time? Are you looking for a serene garden? Whatever it is. And in travel, I think the intermediaries have the ability to combine and to connect a lot more third-party pieces. Again, if you're just connecting me to one hotel, I think your value is greatly diminished. If you're connecting me to an entire universe, and on top of that, being able to sub-select the right number of things for me as B2C or B2B, I think there's a really exciting opportunity there for intermediaries to reinvent themselves in the future. And hopefully some of them will also go away and die, and we can get rid of some of the inefficiency in the middle.
Mm-hmm. Appreciate you sharing that. Give you a slightly easier question now. What are the most effective models for supporting innovation in the industry, from angel accelerators, incubators, venture clienting, you know, through VC and private equity? Probably a little biased to wherever you are there, but
I think like the obvious answer is everyone is very helpful. But I think like Gilad, you made a really good point when you discuss about the new role for corporates, and we're seeing a lot more corporates really getting into the game. And I think the other point that we mentioned earlier is the private equity, right? Initially, private equities were mostly about M&A, roll-ups, consolidation plays, which will still happen, that's for sure. But what we're seeing as well is now this push, some of the investment are not just pure majority secondaries, but there's also like a good primary round to really fuel innovation. And we didn't really see that 5 years ago. Now we're seeing it, and I think that's really kind of promising and exciting for the future of the industry.
Yeah, I think we invest across a wide variety of industries, and travel is probably the one where we're most collaborative with like value-add angels and strategics and folks who are solely focused in travel and corporates. And it's just the access that they can provide, the access and the deep knowledge of all of the entrenched systems that are there within travel. I think we all need to work together to help companies manage that.
Just about out of time. Really quick.
Can I just channel what Kara would say? Kara just walked out, but I'll tell what she said. You have to pay for pilots. If you want good tech and innovation, if you're a corporate, if you want good tech and innovation, you have to pay for pilots. You would never do your work for free in your business. It is unreasonable to ask startups to work for free. Thank you.
Really good place to end. I want to just end on your advice for founders. Just a few words because we're out of time at this moment.
Yeah, just keep going to these events. Actually, the first deal that I sourced that we invested in came from a Phocuswright relationship. So it works, and investors are here because they want to invest. So please continue coming up to us and just keep going.
Be a disruptor or be a consolidator. These are usually the two pushes on our side.
Yeah, we're in an industry with a lot of stakeholders. You need a lot of people to be cheering for you. So find a way to become a hero, not a villain to the rest of the industry.
Great. Thank you for keeping it succinct, Betsy, Mia, and Gilad.
Thank you, Mike.
Thanks.